Welcome. Thank you for joining us for our webinar, Protecting Client Money Next Steps and What It Means for Your Firm. So whether you're watching this as a live broadcast or watching it on demand, we really appreciate you taking the time to join us. So I'm Richard Silver. I'm a Policy Associate at the Solicitors Regulation Authority. And just to really briefly set the scene, so in a moment, I'm going to be handing over to our speaker today, Chris Hamford, our Director of Regulatory Policy. A quick mention before we do that we're aiming to have some time towards the end of the webinar just to pick up as many of your questions today as we can. A big thank you if you've had the opportunity to send anything to us in advance. But if you're watching the live broadcast of the webinar as well, then you should see an area below the video where you can continue to send your questions into us. So please do pop them into that box there, send them through to us as they spring to mind during the webinar. Without further ado, we're going to get going. So I'll see you again later on. And for now, over to you, Chris.
Thanks very much, Richard. Hello, everyone. Thank you for attending. We had a scary number of people signed up last time that I checked, so thanks for giving up your time. So I'm going to provide you with an update of where we are on our consumer protection review and the client money and legal services program. So we are planning on publishing a consultation later on today. So those that are live are getting a preview. So I'm going to outline what we're consulting on, how you can input in the next steps. Yeah, as Richard said, please do ask questions. We'll pick up as many of them as we can, and we'll take any that we can't think about how we can feed those into our future comms. Okay, so just a quick reminder of the Consumer Protection Review, its origins and aims. So we launched the review in early 2024 with a formal consultation at the end of 24. The aims are on the slide here, so to make sure consumers are appropriately protected when using regulated law firms, to try and maintain public confidence and trust in legal services, and really importantly as well, to make sure that we try and maintain a competitive, dynamic legal market that supports access to justice and consumer choice while keeping the cost of legal services down as much as possible. So the focus is around protecting client money. And we know that overwhelming majority of solicitors are doing the right thing, doing really good work, and are upholding the trust and high standards that the public expect, including around keeping client money safe. But we have seen changes in the market. We have seen things go wrong, including an increase in the number and size of interventions around the time we started the review, and of the claims in the compensation fund. And we are also seeing a rise in mergers and acquisitions and consolidation in the market. So we thought it was right to review our regulatory approach and our safeguards, and really looking to balance between the safeguards and obligations and the risks that we are aiming to manage. So we started the first consultation as I said, in 2024, and that itself was informed by research, surveys, discussion, and engagement that we'd undertaken. Really wide-ranging consultation. So it asked those kind of fundamental long-term questions about whether the current model of solicitors holding client money and our approach to funding the compensation fund remained fit for purpose. We had a range of views about those, and we'll return to them. And we also explored potential improvements to the current system to more appropriately protect client money in the near term. And that's what we're focusing on now. And since the consultation, we also had directions from our regulator, the Legal Services Board, and the areas that we're consulting on now also directly address those the relevant parts of those directions. So we're consulting on some detailed proposals and draft rules, and during the consultation we really want to hear your views and insights about the proposals and the impacts you think that they will have. To say we're really trying to get that balance right between the requirements and the risks we are trying to manage. So there are the areas of focus for the consultation. There are three main areas of focus for this consultation that is set out on this slide here. So the accountants reports regime, checks and balances within law firms and compliance officers roles, And we're not actually consulting on this third one at the time, but we do provide an update in the consultation, which is around improving our kind of oversight when firms changing their profile, including through sale, merger, and acquisitions. So I'll go into those three areas in a little bit more detail now. So starting with the accountants reports and the accountants reports regime. So what are we trying to address? Well, I think the accountants reports are regimes for essential safeguard for client money. So firms holding significant amount of client money required to get that independent review of whether they are complying with our accounts rules and have the systems and processes in place that appropriately safeguard client money. And if not, the accountant qualifies the reports and then must be submitted to us so we can consider what action to take. We're concerned that that's not always happening in practice in line with our requirements. We've seen evidence of this through our investigations, interventions, and more recently we've undertaken a spot check of nearly 600 firms, and we found that a number who were supposed to be getting the reports weren't getting the reports, and some were submitting late, and even some qualified reports were not being submitted to us. So we did find some issues with compliance. So we're concerned that that we don't have the information that we need at the moment to really monitor compliance of this important safeguard. So we only receive any information about whether firms are getting whether they're supposed to be getting the accountants reports, whether they are doing it, and who's doing it, if the reports are qualified because there's a serious issue. Then otherwise we don't have any information about them. So we think that we need to take action. We consulted on 3 options. So one is to reduce a previous requirement, which we changed, which was that all accountants reports should be submitted to us rather than just the qualified reports, although our attention would still focus on this qualified reports, or an annual declaration from reporting accountants to say that they have done the report and whether or not it's qualified, or an annual declaration by firms, so saying whether they're required to obtain the report, have they got one, is it qualified. So we heard a lot of support on consultation for doing more in this area to improve our kind of oversight and make sure firms are complying. And actually the feedback was around, we got feedback around a preference for different options, including a mix of these options. So what are we now consulting on, having considered all of those responses? So what are we proposing? Well, we are proposing a mix of things. So we are proposing that all reports should be submitted to us, and as now the form for the reports would include a declaration from the reporting accountant to say that they have checked what they're supposed to, whether it's qualified or not, etc. We're also suggesting that all firms that hold client money make an annual declaration to us to confirm whether they were supposed to get a report. If they're exempt, then to tell us they're exempt and the reasons why. We're also proposing something suggested on by some people on consultation, that the reporting accountant should submit the report directly to us. And then we're also thinking about how we can drive compliance more through our through the investigation sort of process and the finding process. So we're looking at fixed financial penalties, because those are proposals that we can use fixed financial penalties for the late submission of reports or from incomplete declarations. And we're also looking to update our guidance around what to look for, how the reports are completed, etc. And one proposal is that we set an expectation that accountants routinely seek bank confirmations to verify the list of client accounts. A couple of other points from the consultation. So in the consultation, we suggested or raised the idea that to kind of better ensure independence of reporting accountants, that we should whether we should require periodical rotation of the accountants. We've decided not to pursue that at this time. So we'll instead concentrate on there's already requirements on the reporting accountants through their professional bodies to make sure that they are remaining independent. So we'll focus on that. And we also consulted on whether we should maintain the current exemptions for firms that are holding low levels of client money or only holding client money from the legal aid agency. And we've decided that we will maintain those exemptions at this time. Okay, so that's accountants' reports. The other one of the big areas that we are now consulting on is around checks and balances in law firms. And we're concerned because we've seen examples of issues arising when an individual with significant power within and control over the firm also holds the key compliance officer roles, which can negate the checks and balance elements of those roles. And we've seen examples where there's detriment to clients from actions being carried out undetected and unreported for some time, including in relation to client money. The LSB, Legal Services Board's independent review of actions around the intervention of Axiom Ints highlighted this as a significant risk, that an individual can be the owner manager and hold all of the key compliance roles. So in our previous consultation, we consulted on a proposal that any individual that can unilaterally make management decisions about client money should not be the COLF or the COFA. We heard mixed views on consultation. We heard a fair bit of support for the principle of separation to better ensure checks and balances. We also heard a fair bit of concern around kind of proportionality, or views on proportionality and practicality and cost, particularly within smaller firms and sole practices, and also concerns that if we're too prescriptive, then firms have different governance arrangements, and things can work in different ways. So what are we proposing? So we do think we need to make changes to address the risks here, but we listened to feedback we got, and we are suggesting that we have risk thresholds to start with. So any requirements would apply to only to firms above of a certain size and or who hold above a certain amount of client money. Within those firms, we're suggesting that proposing that any individual who can unilaterally determine or direct significant management decisions should not also be able to hold the COLP or the COFA role, to try and ensure that those checks and balances are there. So that would apply to firms that have a turnover of above £600,000 in a year, or a client balance of over 500,000 at any point in the previous period. We are suggesting an exemption or to part of that for some sole owner manager firms. So if a sole owner manager firm has a turnover of less than 600,000, but is still captured by the 500,000 client account balance, then we're suggesting that they would be required to separate out the COFA role, but not also the COLP role. So they're the proposals. We do appreciate that this is a big change and will have an impact, and we really do want kind of views on consultation of those proposals, including around those thresholds and how any adjustments might change the impacts. We'll also be looking at kind of transitional arrangements for how any requirements are introduced if we decide to introduce anything post consultation. Okay, so that's checks and balances on within law firms. So as I mentioned, we also give an update in the consultation on whether we will look to improve our oversight of firms, significantly changing their profile. So I mean, I think our view is that we think we do need to develop a more systemic approach to collecting, analysing and acting on information relevant to potential risks in firms significantly changing their profile. We do gather different information through different channels at different times, from authorization, and then the information provided with the practicing certificate renewal process each year is our main area for main mechanism for getting information. We also require to be informed of other material changes as specified. But firms can, and they do, significantly change their profile without informing us that at the time. And our approach has not been to kind of try and oversee changes in a firm's profile. In relation to acquisitions, for example, our focus has to date been on the risks in the closing firm, making sure that the files and the money are kind of disposed of properly and to the right place, rather than considering or actively looking at whether there are wider risks in the acquisition, the way that's being executed or it's being implemented. So in the previous consultation, we suggested that we might want to do more in this area. It's also another area where the LSB, the Legal Service Board, has raised concerns in their directions and suggested that we should look at. So on the consultation, we've got quite a lot of support for having a more proactive oversight approach, particularly in response to acquisitions, and particularly with firms who are doing multiple acquisitions in quick succession. Also heard very legitimate concerns about or worries about the impact that any changes might have in terms of the information we might ask for when we ask for it, and then kind of any sort of approval or monitoring activity that we take, and concerns that could interfere or put a dampener on or get in the way of legitimate business activity. So we are really conscious of that. There are, of course, benefits in growth and innovation, including through acquisitions. Most happens successfully and without harm, but we have seen that not all do, and there have been some high-profile failures, including loss of client money, and we have seen problems arising in some cases from failure to properly integrate people, systems, and processes, for example, when acquisitions are happening. So we think we do need a different approach, but very conscious that that needs to be risk focused and proportionate. It's not always an easy balance to get right. So we're working on proposals. We're planning to consult on these next year. So we're looking at kind of risk indicators. So what are the sort of characteristics we might look out for to suggest that there is a higher likelihood that harms might result from particular activities. We're looking at kind of the information requirements and notification requirements. So kind of what information should we require at what point in a process, and then thinking about kind of what a risk-based sort of scrutiny approach might be that's kind of proportionate and targeted at the risks. So our plans were always different, slightly different timetable. So we're working on, like I say, there's an update in the consultation, but we won't be consulting on proposals or potential starting positions for this for these arrangements until next year. Okay, so the consultations, to say, will open this afternoon. So a bit of a sneak preview for those that are live, and we really do want to hear from you to get your views on kind of what we're proposing, potential impacts that it would have, specific as possible on impacts is always very welcome. There are different ways that you can engage. So it's an online questionnaire, link on the slide. We're planning on running the consultation until Friday, the 20th of February next year. And also, we're keen that you don't wait until the end of the consultation period. If you have thoughts along the way, then or questions, then please do use our contact address here. So consumerprotectionreview@sra.org.uk. And just a reminder that where formal response is published, then we will publish those unless requested to do otherwise. Okay, so in terms of the next steps, well, we'll keep talking to stakeholders. Said we've spoken to so far we've spoken to hundreds and hundreds of stakeholders. We've had really good engagement, both through formal responses, but also various roundtable activities, surveys, social media polls, discussions that we've had, events, various events that have held or we've attended as well. So we've really appreciate all of that, and it's fed into what we've done so far. But obviously, more detailed proposals now on those those areas with proposed rules. So really keen to continue the engagement there. And then, of course, we will consider all of this as we go. But then, when the consultation closes, we'll review and analyze all the responses, refine our proposals based on feedback, and then if we take forward proposals, we'll finalise those and look to finalise rules, which will then be made by our board and subject to approval by the Legal Services Board. And obviously, we will work on depending on what we decide afterwards. We'll consider sort of the implementation plan and transition for any changes. And then the plan is that we will do all this activity this is the near-term actions, and then in the longer term. So we don't have a date for this, but when we've completed this, we'll return to the longer term questions, those more fundamental questions that we asked in the original consultation, and which we've heard lots of views on. So around the model of solicitors holding client money, so whether they should hold it in the same way as they do, whether firms should be able to hold it the same way as they do now, and also around how the compensation fund is paid for. So we're not stopping those, but we are prioritising these actions and improvements that we can make under the current system in the near term. Okay, so I think now I'll hand back to Richard and see whether we have any questions at this point. I appreciate quite a lot of information to take in there. As I say, this is a sneak preview. So if you want to digest that, then of course questions. We provided details of our contact address, and we'll pick up anything else.
That's great. Thanks so much, Chris. So yeah, a lot of food for thought there, and it's going to be interesting I think to see the consultation and to get into the detail there in the paper later on today. Yeah, so good opportunity then. We've got some good time remaining to pick up a few of your questions. So thanks again to anyone who's already been able to send us some in. We've been looking through those in the background here, so we're going to get straight into a few if that's all right. So we'll start with one which I think, Chris, you touched on briefly earlier on, but actually I think it's a good one just to bring back, just to make sure that we've covered off that issue. So I'll just read it out to you as we received it. So when will any decisions be made about the treatment of client interests or relating to solicitors holding client money?
Yeah, so thank you, Richard. Yeah, so as I say, these sort of longer term things. So the plan is that we will deal and with these proposals that we have in place now, which obviously there's a process involved where we're consulting. We'll listen to feedback and then decide on what to do, make the rules, go through the NSP approval process, etc. So we don't have a timescale on this, but the prioritization is what we're consulting on now, and then also the oversight of firms changing profile, which we'll consult on next year, and then we'll return to those longer term questions, and also of course things change as well over time. So I'm sure that some of you are aware that the Ministry of Justice ran some roundtables in the summer around kind of potential for interest on client accounts to be used for funding wider justice initiatives, for example. So there may be updates on that along the way which are relevant. So yeah, I don't have a time frame at the moment, but we're focusing on these areas first.
That's great. Thanks, Chris. That's really helpful. So yeah, plenty to keep an eye on, I think, with that one. So we've had some questions in that are touching on I guess, the sole practitioner angle of some of the proposals, and in terms of any impacts that might be helpful to consider there. So again, I'll just read out a question that we've had through. So where sole practitioners meet thresholds where they would need to divide compliance roles, has the SRA given any thought to how they might achieve this if there are no wider solicitors in the business at that point? So have we got anything that we could say about that currently?
Yeah, I mean, well, obviously part of the consultation is to is to get views on this and the impacts it will have. We are of course conscious and flagging consultation that this does have this would potentially have significant impact on sole practitioners. So there would be requirement they would need to bring either potentially bring someone in or uh, contract with an individual to carry out the roles. So we are aware of the position and that there are challenges. We obviously have made, or we're proposing the exemption so that the culp role wouldn't have to be separated within sole practitioner firms. But yeah, appreciate the position. There are kind of options for doing that. Appreciate they do come at a cost. So yeah, really welcome views on the impacts through the consultation process.
Great, thanks for that, Chris. That's brilliant. So yeah, straight into another one. We've had a few people inquiring a bit further about this concept of unilateral decision makers, and actually in practical terms, I guess, what that might look like in terms of any definition around that term or any sort of additional thought that we might have given to that. Do you have any ideas or any thoughts at the moment in terms of what a definition potentially could look like around unilateral decision maker?
Yeah, so the proposal in the consultation is that well, it refers to individuals that can unilaterally make management decisions, that can unilaterally direct or make significant management decisions within a firm. So so unilaterally determine or direct significant management decisions. So we don't try and define that more precisely. So we heard through the engagement that we've done that, obviously there are different governance structures within different firms. So to try and very precisely define what that might mean. So we consider things like, for example, percentage of, ownership percentage of voting rights, etc. That causes issues because the differences within different firms. So we're not proposing to be more prescriptive around the definition. So similarly, as we require that culps and COFAs are of sufficient seniority and sufficient responsibility within a firm, we wouldn't define that further at this stage. Would be for the firms to determine, and we would consider that with any applications. So yeah, again, very open to. There aren't any sort of easy answers to that. So very open and welcome views on consultation on the approach that we are suggesting, that kind of more flexible approach and how it might work in practice.
That's great. Thanks, Chris, for that. Yeah, so actually something that certainly we'll be really keen to hear views on, as you say, during the consultation. We've had a question as well. So this is relating to, I think, some of the references we made earlier to the mergers and acquisitions side of the consumer protection review. And actually, we've been asked about significant changes in profile, and actually, I guess what that potentially could look like in practice, and whether we've got any thoughts around that at this stage.
Yeah, so I mean, this is what we are kind of working up at the moment, and we'll come back to next year. So what we're really interested in is when a firm can significantly change in kind of any way that potentially, if not done kind of well, could result in a higher likelihood of there being some consumer harm, and we would look to put out there some kind of risk indicators and the sorts of things that we'll be looking at. I mean, the obvious one that comes up all the time is around kind of acquisitions, but very conscious that that's not the only way that a firm can change. So if you think of a firm that potentially move into a whole new area of law, potentially a whole new area of law with access to lots of client money, which they don't have at the moment, that doesn't necessarily involve an acquisition. So we're kind of looking at what the what the potential what potential risks are, and the kind of characteristics of any sort of change that might might raise concern, and then what's a proportionate response to that in terms of information requirements, what information we get when, and then whether there's kind of further scrutiny of what's happening, but being very conscious that we do not want to put any unnecessary barriers in the way of kind of normal activity. And as I highlighted earlier, we obviously see that there are real benefits, and it's vital to a business that they can change to to remain resilient and to grow, etc. So yeah, more detail to follow on that, but it's not just about, I think the point you make is it's not just about sales mergers and acquisitions. There are other changes that might be relevant too.
Great. Thanks, Chris. So straight into another. Thanks again, by the way, to everybody who's taken the time to send these through to us. We really appreciate seeing them. In terms of the accountants' reports proposals, we've had a question in around unqualified reports.
Yeah.
And actually, just to read the question out. What will the SRA be doing with unqualified accountants' reports? And there's reference there in terms of the risks, or the potential risks that might remain there around unqualified reports. Have we got anything we could say around that?
Yeah, no, that's a really good question. So the main driver for us getting in, asking for all reports to be submitted to us, is so that we have better oversight and are able to kind of to monitor that firms that are supposed to be getting reports are getting reports, and to make sure that the qualified reports are sent to us. So where the accountant has identified that there are serious breaches to the accounts rules, or deficiencies in systems and processes that place client money at risk, then we are informed about that, so we can take action. So the reason we get all the reports in, so that we have that full picture and we can see that what's supposed to be happening is happening. Our regulatory sort of attention beyond that would still focus on the qualified reports, where those risks have been identified by the reporting accountant. So we wouldn't be routinely looking at unqualified reports, and in any event, the pro forma at the moment, it doesn't ask for for significant further information if the report isn't qualified, other than confirming that's the outcome of the assessment. I mean, we always have the option to to look at whether we want to kind of sample a number of unqualified reports to see if there is any sort of information in there that's helpful, or builds our understanding. But we wouldn't routinely. The plan is not to routinely do anything with the unqualified reports. Our focus would be where the risk is the highest and where that's been identified.
Okay, thanks, Chris. The next subject that we've got was really around, and I think we touched on this earlier, in terms of external support and situations where firms might be looking outside of their immediate environment to potentially bring in different types of support. And we've had a reference to the outsourcing of client money handling. At this stage, is there anything we could say in terms of whether we think there are potential risks there, or is there anything in particular that we might be interested in hearing from stakeholders on further around those types of situations?
So I think that's probably referring to the broader question of the broader question of whether we are looking to change the model of solicitors holding client money. So at the moment, obviously, solicitors holding client money, and that for transactions and other activity is kind of baked to the system. So whether we want to suggest that that's a change, where firms shouldn't be holding client money in the way they do now, that's one of the longer term issues that we will be returning to. So we're not consulting on that at this time. That will be something we return to at a later date. And as I said, we've heard like lots of views. We've heard yeah, we've heard so much about that, and we've got a good kind of understanding of people's thoughts on this, and where there is support, why that support's there, and also kind of where where there isn't, which is the reasons for that and concerns. So yeah, we've banked everything that we've heard so far, and we'll return to this at a later date, but we're not consulting on that, not on changes at this time.
Okay, thanks, Chris. The next question we have here, so this is around this proposal to actually separate out roles in some situations. And so the question we've been asked is, will the SRA be proposing also to do any checking or asking for confirmation that roles are being split where they need to be?
Yeah, we don't have the detail of kind of what that would look like at this time, but certainly if we introduce requirements post consultation, then we will want to make sure that they are being complied for, and we would obviously expect firms, as with any other kind of regulatory obligations, to record the kind of the decisions that they are making and the reasons for that, but we don't have that level of detail of exactly what a checking process would look like at this stage.
Okay, noted. Thanks, Chris. And I've got a question which I think we covered this briefly during the presentation around implementation and potentially what this could look like, I guess, in practical terms for law firms. What do you think are the potential parameters for setting out what law firms are going to need to do and by when? Do we have an idea for how that might proceed?
Yeah, so we've set out the proposals in the consultation. Obviously, the proposals and the accompanying rules in the checks and balances and the accounts report areas where we have proposals. So we will, and we're particularly asking for information about impacts that that this will have. So we'll take all that into account, and we will and then we'll decide on what our position should be, and then we will make decisions next year. So we would be aiming for kind of by summer next year to have sort of final positions. Appreciate that there will be there is an impact here, so we would look at kind of transitional arrangements and implementation plans. Of course, that will be partly informed by what we hear back from consultation. So we don't have we haven't tried to set out kind of detail on the transition at this point. We'll listen to what comes back from consultation, see what our final decisions are, and then move from there.
Great. Thanks, Chris. So I think we've just got time left just for one or two final questions here. So we've been asked one which is a classic consultation conundrum, actually. So we've been asked, how much scope is there for changes based on our consultation responses?
Yeah, of course, as I say, we're really keen to hear views, and particularly around the sort of impacts that different proposals would have, how they could be adjusted to meet the same aim in a different way, if people think that is possible and would be a better option. So yes, we've listened to the feedback on previous consultation in developing these proposals. I think it's important that we've identified issues that we think need to be addressed. So I think our view is that we do need to make changes, but of course we're inviting views on the detailed proposals now, and we'll take all of those into account in deciding final positions. Do appreciate that there's no kind of perfect answer to any of this. So yeah, really interested to hear views. So yeah, the consultation is open till will be open till 20th of February. We'll publish it this afternoon, and set out previously the how you can get involved. So it's a formal consultation. There's that online questionnaire as well at at www.sra.org.uk/client-money. And we also have the email address of Consumer Protection Review at sra.org.uk, and we'll continue to engage through the consultation period.
That's great. Thanks so much, Chris. I think that probably takes us to the end of our Q&A section, actually. Just to say that if we didn't get round to answering your question, then just please be assured that we are still going to look at them as part of the consultation process. So another really big thanks from us for taking the time to send them over to us today, and more generally for joining us for the webinar. If you had signed up to the live webinar today, then we will be sending the consultation paper link to you as well, so you'll be able to get straight into the paper and read a bit more in detail about the proposals that we've looked at today. It goes without saying that we'll really appreciate your feedback and views as part of the consultation process, and making sure that we continue the discussions with you as we go along. I think all that remains to say is that if you have an opportunity just to provide any feedback about the webinar today, then you'll find a link below the webinar screen, actually, where you can tell us your feedback. So please do so. Again, we'll be really pleased to hear from you on that point. All that remains today is to just say a big thanks again to everybody. Thank you for joining us. And for now, it's goodbye.